Today, the U.S. Federal Reserve left interest rates unchanged. Now, this indicates that no action is likely to happen next year, as we saw from their dot plot. Here to break it down for us, someone who was at the press conference and who understands these issues very well, Yahoo Finance's Brian Cheung. What stood out to you at the presser?
Well, the big news was that there was no news. They didn't move interest rates. They held them steady at the current range of 1.5 to 1.75%. And the dot plot projections appear to show that the Federal Reserve may not even move at all in 2020, which begs the question, what would the Federal Reserve need to see in order to move rates? And one thing that Jerome Powell pointed to was inflation. He said if he saw persistent inflation, then he could see the case for a rate hike. But I also wanted to know on the labor market side, the other part of the dual mandate, what he would need to see in order to call the labor market hot, as he referred to it in a congressional testimony in July. Here's what he had to say in response to that question.
Really wages. I mean, there's so many other measures that suggest that the labor market is, I'd like to say the labor market is strong. I don't really want to say that it's tight. Someone asked me a question about a hot labor market. That was in the Humphrey Hawkins hearings. So I'll say that the labor market is strong. I don't know that it's tight because you're not seeing wage increases. You know, ultimately, if it's tight, those should be reflected in higher wage increases. So it does come down to that. We look at countless measures of labor market, labor utilization, and there's so many, it's too many to count. But the one that is kind of suggesting that it's a healthy number, that the sort of 3.1% average hourly earnings number is a decent number. 3.7% for production non-supervisory workers is more healthy. Ultimately, though, we'd like to see, to call it hot, you'd want to see heat. You'd want to see, higher wages.
So to call it hot, you need to see some heat, referring to wages. And basically, the overall implication is that Chairman Powell doesn't see the labor market as running away from the Fed's dual mandate right now, which is a pretty strong admission that he doesn't see the case really right now by any standard of maybe raising rates for right now. So the overall impression, the Federal Reserve is comfortable with staying with where they are right now. But again, the labor market, it sounds like, still has a lot of slack left in it.
And we also have interest rates top of mind overseas. The European Central Bank leaving rates unchanged as well. And it was also a notable meeting because it was Christine Lagarde's first major decision and press conference as well. So she revealed some stylistic differences with Mario Draghi.
Yeah, Christine Lagarde's first first meeting as the head of the ECB today. They did announce that they would be holding rates steady. Previously, Mario Draghi in September had lowered rates to negative 0.5%. But Christine Lagarde taking on a pretty cordial, almost like more laid-back, casual tone in her meeting. Very familiar during her time at the IMF. She was very cordial with the press, very laid-back, didn't seem too, media uptight when it came to addressing questions. But something that was really remarkable about this meeting was that she did announce, or actually it was already previously announced, but she provided more details on the strategic review that she would like to have completed by the end of 2020. That could cover the ECB's inflation mandate. It could also cover maybe incorporating elements of inequality or even climate change to the way that they consider their monetary policy decisions. She didn't announce any sort of preliminary findings of that. The Federal Reserve and other central banks around the world, for what it's worth, are undergoing similar types of overarching reviews, not necessarily on the climate change bit, but for example, on what types of tools they might need to use in the future, negative interest rate policy, more large-scale asset purchase programs. Those types of things will be covered under this review. So Christine Lagarde trying to make a mark at the head of the ECB by undergoing this review. Worth watching as we continue to watch the ECB.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.